Suresh Mahadevan, Managing Director, Head of Equities with UBS Securities, joins us live now. Suresh, good morning. Thank you for joining us. Suresh, let's start with stocks. Let's start with the stock you track with a magnifying glass, Bharti. You attended the conference call. In fact, I've been told that you were the first one to ask a question. How do you view that stock now? Do you think the springtime for Bharti is over?
Yeah, good morning. I think, Bharti had a tough quarter. I'm not sure how much of the competitive intensity because, clearly Idea had a slightly disappointing quarter as well, but nowhere as bad as Bharti. But I think, the big picture in this sector is pretty clear. There are, probably this sector can have a maximum of 5 players, I think, including government. And I think 3 of them are Bharti, Idea, and Vodafone. So my sense is I think these companies will all reap the benefits as and when the long overdue consolidation happens. And I do think the auctions which are scheduled now in November and it will get completed by December or whatever will be an interesting catalyst to watch out for. In fact, we think the auctions will actually fail in the top 7 or 8 service areas. So if you put all this together, I think at this weak level, I would be a buyer of Bharti without any doubt. But we like Idea a little bit more because Idea is outperforming Bharti today in the marketplace in terms of gaining revenue share. And secondly, also, I think, Idea could be an M&A candidate. And it's also a pure mobile operator. So, we don't have to worry about what happens to Africa and what happens to FX rate movements and things like that. So Idea is a cleaner, simpler story. We like both Bharti and Idea, but with a slight preference to Idea.
Suresh, morning. The 2 mid-cap companies that you track carefully and have come out with good numbers, Coromandel as well as TTK Prestige, continue to hold on to the stocks? And do you think the earnings trajectory would only get stronger from here onwards?
Yeah, I think, both we have buys on. I think TTK and Coromandel are both in my portfolio, though I have recently removed TTK from our, top buys list. Because, we cover close to 150 stocks and we have 4 stocks in that top buys list. So we recently removed TTK Prestige from that. But, we continue to like these names here because these are, TTK at least is quite a secular story. And, it will continue to do well. But I think, the stock has done too well actually in the recent past. That's why we removed it from the top buys list. Yeah, Coromandel we continue to like. I think, it's a group which is kind of less understood and I think, very good in corporate governance. They have some diverse businesses. I think among all the names, I think Coromandel is our top pick in that group.
So there's just one more follow-up question on Bharti and then we'll move on. If I look at the current market capitalization of Bharti, it's about 1 lakh crore. It's got about 23-24% market share. Do you think for a company which has 23-24% market share, they have a large fat dollar denominated loan, nothing is happening for them in Africa, the company deserves so much of market capitalization?
Yeah, I would certainly think so because Bharti's revenue market share is closer to 30% because, the subscriber market share is a meaningless number because if you look at active subscribers across operators, I think Bharti, Idea and Vodafone again are doing well versus, the others are just, inflating the numbers. So my sense is I think, it's the revenue market share you need to look at. For a company with close to 30% revenue market share, I think 100,000 crore market cap. Look, let's first take the debt out. I think there is a lot of misconceptions around Bharti's debt. Bharti's debt, a large portion of it, around $8.5 billion, is sitting outside India in Netherlands, I think SPV. And that is supported by the African assets. The African business we think is worth roughly the same amount as debt. We attribute 0 equity value to the African business. So we don't have to worry about the debt for the Indian business. So when you look at the Indian business, I do think it's probably undervalued as a business. Because if you think about it, I think we are asking for 14,000 crores as a reserve price just for 5 megahertz of 1800 spectrum. So I think it's massively undervalued if you take a slightly longer term view. Idea is even more undervalued if you take that view because, its market cap is a lot lower and debt is also a lot lower. So, I definitely think from a medium-term perspective, these businesses are clearly undervalued.
Suresh, what about the PSU banking pack? After what we've seen from SBI, does it seem like the NPA overhang is here to stay for the entire sector?
No, definitely. I think, we recently downgraded SBI to a sell. And we have also put it on our least preferred. We also have Bank of India in our least preferred list, which is a list of 5 stocks out of the 150 we cover. So my sense is, I think, the weakening monsoon actually has meant a bigger problem for the PSU banks, given that the government, could get into, use them as a vehicle, I think. So my sense definitely is, PSU banks will continue to underperform is my view. We have actually zero weight in our portfolio on any of the PSU banks, though we like a whole host of private sector banks. And, clearly SBI, as I said, we recently downgraded. In fact, we downgraded ahead of the results. So, not reacting to the results, but, probably proactively thinking about how the, operating profit growth as well as the NPL situation is. So, definitely I would not be keen to look at the PSU banks at this point at all.
Suresh, do you worry about market leadership? Because on a daily basis, the market leadership is now getting narrower and narrower. Earlier it was about 15 stocks. Now it's only 5 or 7 stocks which are leading the market up.
Yeah, primarily consumers, maybe to a certain extent pharma, maybe IT is holding up because of the rupee, I suppose, and I think Reliance Industries has made a comeback. Yeah, no, I think it's a problem. I think, frankly, I'm not too positive on the prospects of the market in general, because I do think the macro situation is quite worrying, actually. It is frightening for me sitting here and, looking at the data points. And market is actually premising a lot on hope. I think some of the investors who are bullish are arguing it's all in the price. I don't think it's all in the price. I do see a meaningful downside of 10 to 15% at least from here. So I'm actually quite worried about the markets at this point, and would stick to specific bottom-up stories and not really go gung-ho on the market at all.
Suresh, having said that, if I look at the liquidity, we've got $10 billion of fresh inflows this year, $3 billion of fresh inflows in the last 2.5 months, and about $1 billion plus of cash market commitment in this year itself. Now, the easy way to characterize that is that's hot money, that's ETF money. But if the India story is so sour, why would anybody invest in India?
See, I think, look, there are a few things here. I think the first thing which determines flows, I think, is the global risk appetite. And I think that situation has improved given some of the assurances from the ECB, etc. So that is number one. So when risk is on, money flows into India. When risk is off, I think money flows out. The only year in the last 10, 12 years we have had substantial outflows is during the global financial crisis. And that had nothing much to do with India fundamentals. Though India slowed down, I think we are slowing down much more this time, right? So my sense is that is the number one factor. Number two, I think relative to the BRIC countries or the GEM countries, I think India is not doing that badly. So, I think everybody is doing badly and we are doing slightly better than average, I would say. So that works in our favor. But what I'm saying is, look, all these flows, etc. is great, but they have to be backed by fundamentals. Beyond a point, I think the markets in the medium to long term are driven by fundamentals. It is what happened to the rupee. The rupee was rock steady at 44 or 43 or 45, and then suddenly when the confidence evaporated, we have to adjust for the inflation, and that is exactly what happened. So, beyond a point, actually, the fundamentals kind of took over. So my fear is that that may be the case here, because if I look at our, the whole political environment, I think, we are looking at elections in May 14. We are obviously, the May 14 visibility right now, it's too early, but it looks like again a hung parliament, maybe a third front government. These things quite worry me, because we could very well enter a phase where we could grow between 5 and 6% for the next 3, 4, 5 years, whereas our real potential is probably more like 7.5%, 8%, and that is a real shame if we miss out on that. So my sense is, yeah, there is probably the markets can correct another 15%, I think, beyond which it will probably discount everything. But I'm not just swayed by the flows here. I think the fundamentals have to improve for the markets to do well sustainably.
Did you say 15%? 15% means that you expect Nifty to go back to levels of 4,600, 4,700?
Yeah, I think it is possible is what I'm saying. Otherwise, we might just time correct and, our earnings will grow into this level. Because, we have been literally, I think, flat for the last 3 years, if I'm not mistaken. So I think, that phase may continue for a year or 18 months more. So that is another possibility. If we don't correct, we just time correct.
Suresh, in the near term though, with a stagflation sort of macro environment, how hopeful is the market or you of a rate cut by the RBI?
See, the rate cut is definitely going to happen. The question is when, I think, because the RBI started with 50 bips of cut. But, the real issues are, I think, related to investment, which I think the sentiment is very, very poor. So I don't think by cutting rates we can revive GDP growth that much. I think I would rather improve the business sentiment, which I think the government should try really hard and take some tough decisions and do it. The second thing I'm a little concerned about, where we will see data points in the coming quarters. Obviously, some of the companies like Levers and all produced very, very good numbers. But I think is consumption going to hold up is a key question I'm asking myself. Because I think, we have had inflation, as you rightly said, which is running at whatever percent that is, CPI, if you look at it, it's probably between 8-9%. And I don't think the wage hikes are, going to be that high anywhere. In fact, I think they could be flat to marginally up. Then I think, we are looking at maybe at least discretionary consumption will take a hit. Staples is probably the last. So I think that is a theme worth exploring. So the thing that worries me is investment demand. The thing that worries me is consumption, secondarily.